it's not always as easy as they paint it. Like, I'll give you an example. I have people that call me out of the blue and they're like, "Oh, I heard somebody say that you can buy a $5 million business with 0% down payment." Technically, you can. Is a bank gonna do that?
Yeah.
Probably not.
Thank you for joining me here, Sam. It was a pleasure. Thank you for coming to the set here.
Yeah.
And what I wanted to talk about today is one, your background, how you got into SBA lending, why you got into SBA lending, and what is the landscape like today, different from it was yesterday, and what do you see over the horizon, what's going to look like tomorrow. So starting off, tell me a little bit about your background and how you got into lending. Why?
First of all, thank you so much for having me. I appreciate being here. So I like, I'm from Colombia, born and raised there, came when I was 19 years old, and came to go to school. And Colombia, there's not a whole lot of business acquisitions or business, or none of this whole environment really happens there. But when I moved here to the US, I noticed that was very popular. People were doing it a lot and kind of wanted to understand it a little bit more. So ended up going to school for economics, got an econ degree at UCSD. Did that for a little bit, 4 or 5 years, graduated. And then I went to do some brokerage, did some brokering stocks and stuff like that, but didn't love it. Went into banking. I did that for quite a bit. I went from banker to teller.
Oh, you started at the ground floor.
Yeah, if you can think about anything in banking, I've done it. I've done everything. And when I was a banker, I did a little bit of business banking, and I always kind of loved it, but it wasn't my main role. It was more like, if the business banker is not available, then you can kind of do it, So, but I always liked it, and I always like helping people, and I always thought, man, these entrepreneurs are freaking awesome. They take risks, they take chances. I kind of like that, but I didn't want to take that chance because I couldn't afford to take that chance at the time to do it. So I stayed with the banking thing. I became a branch manager, and I did that for about 5-6 years. Very successful, did very well.
Good thing.
I was with Wells Fargo and a small bank called Union Bank back in California.
Okay.
But I honestly, my mind was always in business, so I decided to get my MBA.
Yeah.
Got my MBA, and that's when I really decided, like, no, I really want to do something business related.
Did things change for you when you got the MBA? Because I'm curious, I'm an immigrant as well, and breaking into an industry where, typically it could be challenging, right? The barriers. How was that for you? I'm curious, going through the ground level. Having the MBA change, did you see a drastic change in terms of where your career was going on?
Yes. I met, when you do your MBA, I mean, the whole point, and I tell my kids all the time.
Yeah.
The whole point of an MBA is not really so much what you're gonna learn at the MBA. Is meeting the people that are already doing the MBA. Because you can nowadays, you don't have to go to school to learn certain things. You can Google things. You can YouTube videos.
AI
probably very here. Even Harvard has classes that you can Google or YouTube, and you can learn everything. It's the people that you meet there. And so I've had a bunch of entrepreneurs, and again, that I'm like, yeah, I definitely want to be in business. That's when it really took a change.
Yeah.
And so I decided to start making calls, like, hey, what do? I want to get in business. So I have met a friend of mine at Unibank back in California that was an SBA lender. And I didn't know what that was, but I did what I had to do with business.
Yeah.
So I called him and I said, hey, man, this is what I want to do. Do you know anybody? Do you know anybody that, can do that or that? And he's like, yeah, I actually have a friend that is opening a bank in Dallas. Well, I had moved to Dallas, by the way. I had moved to Dallas and I was at another bank. I'm not going to mention it, but I was miserable. I hated it. And I'm like,
where'd that job specifically?
So I moved from California to Dallas.
Yeah.
And I moved as a bank manager.
Okay. Yeah.
With another bank. And I did not like it at all. It was just way too cookie cutter.
Yes, actually, yeah.
It was like a bigger bank. And so I'm like, I don't want to do this. So I started calling all my friends, all my contacts, and this guy called me and said, hey, I got a friend of mine that's opening an SBA bank. I said, what is SBA? But, I obviously have my business background, so I was very knowledgeable about the industry. I just didn't know what SBA was. So interview with him, he gave me a great opportunity. My background and my MBA and everything helped. And even though I wasn't, but I was in banking for a long time. So, and I had done business banking, just not specifically SBA.
Yeah.
So that's how I got into SBAs. Then he hired me, and I went to him, and I was used to kind of like, hey, here are your leads. Here's the people that you call. Here's your clients. And then I went to him and I said, hey, great, I'm ready. I've done all my training. Where leads? Who do I call? It's like, what do you mean leads? Go get it. Go.
Sure. Okay. You do it on a
So I started pounding the phones and going to the street and calling people, and, little by little, So that's how I got into it.
What's the difference between business banking and SBA? Right? Because some would think, SBA is small business, and right? Yeah, but what's the difference?
Yeah. And again, full disclosure, I didn't do a whole lot of business banking. I was more of like the backup guy.
Yeah.
SBA. So, in my mind, the way I see it is, SBA is a little bit more transactional, a little bit more, business banking at the level of banking is more of like customer relationships, customer holding, and they handle everything for you. They handle all your accounts. If you need a loan, they do it. And so I think that's a little bit of the difference.
Like line of credit.
Line of credit. Yeah. They need like, cash checking, or, they hold a relationship. You can call them anytime. So that's what more, and they also do loans. They do conventional, which is different than SBA.
Yeah.
That's why they do a lot of SBA, because it was more conventional lending. And these are long-standing relationships that, you get certain, business loans are different than SBA.
Yeah.
SBA, it feels a little more transactional than the actual. But yeah. I think that's the main difference overall. Yeah.
Yeah. Transactional when, working with the buyer, because oftentimes really you're on the buy side of things, right? As a buyer, if it's a acquirer. Yeah. So you say more transactional, just, you step in to aid them in acquiring, the lending.
For the most part. And by the way, I do hold I still talk to a lot of my clients in day to day, but it's not the day to day where like, hey, my cash is in check, what can I do? Or, hey, I need to meet certain people, or I need to do that. I don't do a whole lot of that. I maintain a relationship to make sure that they're doing well, and that everything is according to what we talked about at the beginning, but it's not the cash checking, or hey, I need another checking account, or I need to do this, or I have questions about my account. They have a relationship manager that does that within the bank, but I don't do the person.
Yeah, okay.
Yeah, I'm more helping with the actual getting the SBA loan.
Yeah,
that was you
doing that there. Yeah, so slightly different relationship, but what do you look for when you're working with a buyer there, and when looking at a deal?
Yeah, that's a great question. And by the way, in my process of getting an SBA loan, the first step of the SBA transaction, the roadmap that I call it, is meeting the buyer.
Yeah,
and so the most important for me when I'm talking to buyers is I really want to understand, why are they buying the business? What is the whole purpose?
Yeah.
And that gives me a good idea of, do I really want to work with this person or not? Just not so much because they'll qualify or they'll get approved for the loan. It's more of like, believe it or not, buy the business, for most people, it's a life-changing decision, right?
Yeah.
And so I want to make sure that they're doing it for the right reasons, and not just like, I like a cash flow. It's great. I'm buying this business. Like, yeah, that shouldn't be the reason why you're buying the business, I mean, it is part of it, but it'll be the main reason. Yeah. So I really want to understand what is their purpose of in buying the business. What is it? Your passion? Did your parents do it and you wanted to do it? Or are you more like, if not just look, so that's what really, like, I get referrals from brokers and partners, and they're like, hey, here's a package. I'm like, thank you, and that's great, but I still want to talk to the client. I want to make sure that they're buying it for the right.
Yes.
So that's it in a nutshell. That's kind of
absolutely, and that makes sense there. It is that for you. their passion or, a deeper meaning, is that an indicator of their likeliness of success?
I think
They're right. If,
more than anything, more than smart or knowledgeable, or it's how passionate are you about the business and how really you want to do it. And also, does your experience, life experience or work experience, does it fit the business that you're buying?
yeah.
I will tell you, there are many times, and no harder than, you can try everything. It's up to,
Yeah.
but oftentimes and I'll just give you an example. Somebody's worked in IT their whole lives. They're a corporate and they're working in IT. And then they want to, hey, I want to buy this $20 million restaurant or a $5 million restaurant. I'm like, what are you doing? You are last minute. So I asked them and say, hey, have you ever managed a restaurant or, oh, no, I just, it's a passion project. I just thought I would do great on it. And I'm like, I don't know. Maybe you should be looking into something that's more close to your skills, So that, that's kind of what I mean by that. It's that kind of, does it fit? Does a buyer profile meets your business profile? Yes, I think that's the most important thing.
And that makes sense, especially, as the landscape changes, right? And also, oftentimes these loans is not a fixed rate for there is variable there. So, tell me about, I know there's been some changes in the marketplace here with SBA lending, and also, tell me how these changes impact, buyers, and how that ties in with it, someone having the passion there.
Yeah. So the SBA is actually known for making changes quite often. That's why we have to stay on top of the SOP center. Yeah. And so I like to make sure that buyers understand all the changes, because what was okay to do a month ago, it may not be okay as it goes now. Yeah. Or understanding that there's rate variability, right? So like, you want to make sure when you're doing your cash flow, and we do it as a bank, but I also want to make sure the client understands that, what we could be out today at 6%, it could be 7%, but it can also be 4%. So how does that affect you? And is that going to impact your decision? Like, you got to make your decision based on all the facts and knowing that things are going to change. Yeah. So going back to what has changed. And so June 1st, as you know, the FAA make several changes. And so that has changed the environment a little bit and the way that deals are structured. Because so before June 1st, you were allowed to buy a business with a 5% injection. Good. As long as the seller was okay.
The standby. Right?
Yeah, 5% with a 2-year standby, which honestly a lot of sellers were okay with. They changed it to now the standby has to be for full 10 years.
Yeah. Oh.
So guess why? No seller. I mean, I'm not saying no seller. Most sellers are going to be okay with.
Yeah.
So what has changed is, before, where you had oftentimes people that were buying businesses at with a 5% injection, now they're having to come up with a 10%.
Yeah.
Which honestly, for me, I think it's a good thing.
Why? Right.
Just because I feel like if you have the more skin in the game that you have, the more committed you are to the business. So generally speaking, I think it's a big change. The bank also wants to make sure that you have enough post-closing liquidity. So not only you need the 10%, but you also need to make sure you have extra funds just in case. I mean, believe me, emergencies do happen.
Yeah.
Yeah.
So all in all, what we're looking at, like 15%, 10% to inject 5% as carryover, or what, 20%, about 15%?
So generally speaking, you want to have the 10% down payment and another 5 to 10%.
5 to 10%.
Close, yes.
So I'm curious here, with the change there, does it, negatively impact the ability of a buyer to have that cash on the back end, when historically they could, and then still have the cash, by using the standby? The sort of
the honest answer is, if you barely have 10% to add a business, you should probably not.
Yeah,
it's a little tight, and there's business cycles that happen, and especially in the first 6 months to 12 months, it's going to be a little rocky, and you want to make sure you have, in not every case, of course, but you do want to make sure you have enough liquidity for an emergency.
Yeah.
And so if you're just putting your 10%, you have no more money in the bank.
Yeah.
it is not a good. I will not advise that.
Yeah, you're even always, despite the cash flow being high. What if the deal, say, it's $1 million cash flow, and selling it for say 3.5, still, yeah,
Yeah, and honestly, even before when we were doing the 5% injection,
yeah,
I would tell my clients all the time, we're not gonna approve a deal just because you have the 5% barely, and we're doing it because it's a good structure for the deal overall,
yeah,
but not because that's just all you have.
yeah,
Does that make sense?
yeah. That makes sense. There.
That's the way I look at it. Now, the other change that has had a huge impact actually is the SBA allowed for some time partial buyouts.
Yeah,
So you could buy 90%, 95% of the business. And the seller could retain certain
yeah. They roll over.
roll area. Yeah. And so and as long as you were under 20%, the seller, it was under 20%, they wouldn't have to guarantee the note. Guess what? The SBA made a change where even if you retain a 1% or 2% equity, you have to guarantee the full note.
Wow.
Good luck trying to find it. See, so that I have not done. Yes. Yeah.
Wow.
Yeah. So that I'm not a huge fan. I do think that having the seller stay in the business and help with the business and have skin in the game, honestly, I think that was a good thing for.
What if a person, takes their 100% payout and then turns around and and gives it back to the buyer as buy-in? Do they still have to?
I think we're gonna plead the fifth on that. No, that I'm after closing, we'll really get involved in what happens after the scenes. I mean, we can only let people know what SOP allows and doesn't allow, when SBA is okay with or not. Do things happen behind the scenes? I'm sure. Yeah, I don't know. I mean, honestly, I don't know. I never called back and like, hey, did you give some money, man?
Yeah.
That's a good question, though. Yeah.
The reason why I asked, recently had a call this week with a guy who had done several refresh valuations for him. He manufactures. He's a collaboration company. With things like cameras and like lenses and chips, and and his goal is to sell and then turn around and invest his capital back into.
Make sure you don't send me them deer. I don't think, like I said, I'm sure things do happen. I typically don't,
don't want
because it's our business. So, other rules. We're not going to be there checking every day what they do or what they don't do. So it's if something happens and the deal goes back for whatever reason, and the SBA investigates, you're going to be in trouble. So I'm just saying, well,
do you have a idea why they made that change for
I have an idea. I'm not sure if it's going to accomplish what they were going to do, right? So, what I think the reason they did that is because I think they think the SBA thinks that there's people out there that are buying businesses without the intent of operating the business, which is the whole purpose of SBA.
Yeah.
SBA's purpose is for you as a regular person, go buy the business, you operate it, you're essentially. I think they figured there were people, out there that were just buying the business, just for the cash flow as a passive investment and letting the seller stay as an operator.
I see.
And that is no. I'm saying I don't think there's anything wrong with that.
Yeah.
I just think that the SBA, that's not the SBA.
Yes.
That's it.
I see. Yeah. It's to okay. Yeah. This is generated, business owners and the operation, not like, okay, that's pretty interesting because that's, from my perspective there, that method of, say, buying a business and the seller still operating, what's the difference from, say, buying a stock or something like that, right? Where, you're not working in it, but you're buying an equity stake or something of a sort there in that business. I agree. Yeah.
Like I said, I think it has to do with intent. Is that what SBA was meant for?
Yeah.
I don't think so. SBA was meant to help individuals acquire businesses where they're going to operate themselves. Yeah. Not like, hey, I'm going to invest in this company. I'm going to have the seller operate it, and then I'm just do like 5 or 6 of them, and I'm good to go. That's why. I think that's what the main change is.
Yeah.
Now the good thing is now the SBA does allow to where before they didn't, they allow buyers now to buy businesses over the $5 million overall cap as long as they're different in age scope. So that's great. Then you can actually have over $5 million in SBA loans as long as they're not the same exact industry. So that's a good thing.
But not the exact is like is a corporate buyer like a company.
Oh no, so like if let's say you're an individual, you want to buy a landscape company,
Yeah.
and the landscape company is $4 million.
Yeah.
After 3 years,
Yeah.
the SBA is $5 million.
Yeah. Yeah.
It's one year church. So it's a $5 million cap. So if you say you buy the landscape, you order for $4 million, you have great experience in running a business, operate. Now you have a great opportunity to buy a construction company.
Yeah.
And it's $4 million. It's a different industry.
Yeah.
Similar, but different.
Yeah. And you still have the SBA loan open because
You still have, let's say you still owe 3.5 years, and this construction company is $5 million.
Yeah.
Before you couldn't do that.
Yes.
It's over now you can.
Okay, and because it's different, Nick's
Different. It's called an NAICS code. Yeah, code that is assigned to every different.
industry classification. But if you wanted to expand and say buy another landscaping company because your landscaping business is doing so great, you can't do that.
No, not if it's over. Yeah, I know. You're right. Oh, that's the deal. That's right. You cannot. Yeah. You think it'd be.
Yeah, that makes sense. Yeah, because you're already familiar with it and you've shown success. So acquiring to grow would that's sound to be
Like if you're hey, SBA, if you're listening, yeah, that's a great idea. As long as it's an expansion,
Yeah.
you'll be able to get over 5 million. Yeah, but I agree. I think so. Yeah.
Yeah.
It's not a lot right now.
But like, but when say, a company doesn't have an SBA loan, you lend or expansions, right? As well. Yeah.
Yeah. So we do expansions, and we can actually do it with 0% down payment.
Okay.
So if you do have a landscape company, you've been operating for 20 years, you got great revenues, you got great income, great cash flow, you can show that you can run a business, and you want to buy another landscape for $4 or $5 million, we will finance 100% of that.
But so why? Okay.
We incentivize people to expand, and out of the fact that you already have an existing company that has equity, we know what you're doing. I think it's an incentive for existing buyers existing operators, to expand and get better terms than if you were going out.
And is there
Plus, it's all about equity and skin in the game, right? Yeah. So you go basically by you expanding and acquiring the company under the same company.
Yeah.
That is your equity. That's when you got to put trivia to your skin in the game.
Yeah.
So I think that's why.
Yeah. I'm curious there, from, when you first started in the game to now, what have you seen in the buyer landscape, the deals transaction? What has changed from, when you started back then to now?
Oh, that's a great question. So I started doing SBA loans 7 years ago.
What?
COVID happened. Yeah, COVID happened. And by the way, I did used to do a lot more startup transactions.
Yes, it's just okay.
Back then, that has changed.
New ventures, no cash flow business,
Projection based.
yes,
Yeah, all that. And then COVID happened, and that all didn't go very well.
yeah.
So I think in my sense, I've definitely transitioned more into working more on business acquisition than I have into. And I will do a few startups for the right buyer. Yeah, right. Somebody with great experience, somebody that has a lot of liquidity, somebody with great credit, we got great connections. We have that initial interview, and they have a full business plan. They know what they're doing, how they're going to get the business. I will do that.
Yeah. Okay.
Now, again, my previous example, somebody just, hey, I just want to try this out and have some money. Nah, not so much. Now, the type of buyer, I think it's nowadays, it's probably a little bit more sophisticated than it used to be. And the transactions are definitely more, not complex in a bad way, but just more complex overall. It's just the way they structure the deals, the acquisitions, where more, back then it was just like, hey, 10% injection, here 90% the bank finance is done deal. Now it's like they have these southern notes, are you capable southern notes? They have this, they have that. I know. So that has changed a little bit. Investor,
And say complicated your role. Your
a little bit, but you learn, you get used to it.
Yeah.
We have attorneys that review the purchase agreements, they review the transaction, they make sure the SOP, they compare it to make sure that it's in guide with that. So we have, thankfully, we have health and people that can help us figure those things out. And I mostly leave that to the attorneys. That's their job, not yeah. No, my job is to make sure that at least the front end, the LOI, what we call LOI, is in accordance to SOP, to the standard trustee. Yes, yes.
See, yes, sir. And so not as many startups as when you first started off.
Yeah.
What about expansions? Is there has it been normal or an uptick?
Still do a lot of those. Yeah, still do a lot of those. And I think SBA has become very popular. In the past, I don't know, in the past 4 or 5 years, influencers are out there advertising it, telling people that they can buy a business and buy their freedom. It's not all that easy. Like, sometimes they make it sound. But overall, I think it's become a lot more popular. I mean, when I was at my other bank, I was averaging between. I mean, listen, if I close my last year, my other bank, I closed $24 million 4 or 5 years ago. I can't remember exactly. Maybe 3. That was literally the number one banker in the entire bank. $24 million. Well, I closed $22 million here today, this year. That's if that answers your question. Yes. I mean, last year, I think I closed 45. The year before, I did 62. I did 50. I mean, yeah, you killed it. Double, triple. It's double, triple, but what used to be considered, wow, you're closing a lot of deals. Yeah. That was just like, I just did that in 5 months. So that has changed. Yeah. And that is substantial.
Is one of the reasons for the uptick. I know, I researched and hear a lot of business owners are baby boomer age, right? And a lot of them are retiring. Yeah. Do you see a correlation with that in the growth in transactions there?
I think you're right. It is a mix between the baby boomers retiring, and the influencers, and YouTube and all the videos and Instagram and TikTok and promoting, because, and I think it was part of like people just didn't know. Yeah. Like, hey, nope, you didn't know you could buy a business with 10%, but holy crap. So, I think that's changed, and now they know, and then they're like, oh, maybe I should do that. Maybe, I'm great at what I do. I'm corporate, but I'm stuck there. It's a lot of, it's political. I had to climb the ladder, and I've been there. So you just get stuck in a place where you're just like, I mean, oh my God, I'm working all these hours. I'm working 60, 70 hours a week. I'm not going anywhere. I'm making a base salary, and with they give you 3% of like the 3%, right? How am I gonna go with that? Doesn't even pay inflation. And so that's what they're trying to promote. Like, you can own your own business and make all this money. Good. And not every one, but like a lot of them do. All right. And so, and again, the easiness of hey, with the 10% and great cash, I gotta find a bit.
And 90% if you're expanding,
and a 0% if you're expanding. Absolutely. So again, it's not always as easy as they paint it. Like, I'll give you an example. I have people that call me out of the blue, and they're like, "Oh, I heard somebody say that you can buy a $5 million business with 0% down payment." Technically, you can. Is a bank gonna do that? Yeah, probably not. So, anyways, that's it. That has changed.
But you make it not so hard for your clients and your people, right? Because I understand, it's certainly not a walk in the park, but it's certainly not a daunting task,
honestly,
to do, right?
Honestly, it's not. Like I mentioned, as long as you have that 10%, you have it, and you have your post-close liquidity, you have good credit. It is important, though, that you know what you're getting into, though. I tell people that all the time. Just understand the business well. Know where do they get the business? Where does the revenue come from? Yeah. That's why when we ask for projections, the first thing I look at is, okay, so your projections were $1 million a year. Okay, that's great. Where did that come from? Yeah. How do you understand what is the role of the owner? What does he do to get that $1 million? And if they can't answer that question, that is a problem. So that's what I would say. So again, we make it as easy as we can for the right fit.
Yeah.
like I mentioned earlier, it's a life-changing decision. You don't want to be, now, because the previous owner, they were doing great, but they didn't have a $1 million note.
Yeah, you got an ad. Yeah, rise. You got it. Sure, pretty good.
Yeah. Those sales are coming in no matter what. Yeah. So
it's not so easy, but it's not that hard where they can't, get.
No. And by the way, the bank has a great process where we have people that help the borrowers from step one. The first day that they talk to me, interview, and I tell them exactly what it looks like. We have that. I have a sales assistant that helps them package the loans, fill the application, make sure we go over the checklist and make sure we have all we need. We check the business plan again to make sure that they know what they're doing. They know, they know all the ins and outs of the business. They have the projections. We check everything. Once we get that, we move the deal into underwriting, and the underwriters do a great job. That's when they really dig deeper into the deal, and they will ask you a lot of questions about you and about the business. And there's a misconception like, my God, why are they asking me so many questions? Is the deal in trouble? Like, I might know that. We're doing it for your benefit.
Yeah, sure. Yeah, I've heard the statement, think is only as good as their underwriting. See, a lot like
the underwriter has, yes, absolutely. And again, we're doing it for the buyer. Like, we want to make sure that, I didn't think about that question. That's a great, you go back and ask the seller, So oftentimes I will set up a Zoom call with buyers, underwriters, and me, and we go over the entire deal. We'll go over ad backs, we go over transactions, we go over cash flow, we go over clients. Is there any concentration? Is there any seasonality? Right? Hey, I'm buying I don't know. Just give you an example. I'm buying a landscape company.
yeah.
But I'm buying it in January. There's no sales in January. How are you going to? So you need to understand that. Now we're closing in the summer. So is our busy. Great. Excellent.
Yeah.
But what are you going to do when there's not as many sales? Yeah. So those are the things that underwriters will ask, and they go, oh, I didn't think about that.
Yeah.
So yeah.
And I'm curious, having the conversation with the buyer and underwriting, and I'm curious, how much does a broker impact that? Because, my experience, we try to, on the sell side, provide as much clarity and information. Oftentimes, get a term sheet, from a lender like yourself, preemptively. So when we go to market, that's there. So I'm curious, how much does a broker or seller there, aid in your job, and how does it positive impact or negatively impact, your ability to?
Yeah, I would say general positive impacts. Yeah. Especially the brokers that are very experienced.
Yeah.
And that they've been in the industry for a long time. They call it a memo.
Yeah.
A memo. They put a memo together. And I've seen ones that are 1 page.
Yeah. Yeah.
But I've seen others that are
There are hundreds of pages. Yes.
20 pages, and they do an amazing job. I like the ones that actually, because for the most part, you're going to see, hey, here's all the benefits. Here's the great things about the business. Okay, but what are the links, the things?
What are the cons, the weaknesses?
Yes, what are the weaknesses? Like, and by the way, so weaknesses can be made into potential opportunities. Absolutely. Like, let's say, okay, weakness of the business, they don't have a website. Well, guess what? If you get a website, you're probably going to generate amazing sales. That's one. Or
so do you like stuff like when when you're looking at a deal and you see a company, they don't have a website, they don't have, as a baker, do you like, okay, this is prime right here?
Great. It's good. Yeah, it's a great. And that's mostly maybe sellers that are in the late stages. Maybe they're settled with what they're having. They want to make it more money. They're good with what they have. They're not going to bother in the hustle, But if you have a buyer that's coming in, younger guy, he's been in school, he's been in corporate, he's got very marketing skills, and now he's gonna go get a website, he's gonna go hire somebody to do TikToks or YouTube videos, or they don't have salespeople, they just have the seller, the word of mouth, and now the guy's like, hey, maybe I can get 2 people to work in sales and generate X amount. Oh, we love that. You can, and by the way, I have seen it. People turn $1 million business into a $5 million business within 6 months.
Yeah, that turnover fast.
Literally, I mean, it's that quick if you're doing the right activities.
Yeah, I see.
So that is that's the business, and I tell people that is your ideal seller.
Yeah,
somebody that's been in the business for a very long time. Sales are kind of, they're consistent. They have, but they're very love.
Yeah.
And then you go, but why? Why are they not grown?
Yeah.
And then you look in there and it's like, oh, they just don't wear it. They're just happy with what they have.
Well, and you go in there, you make a few changes, and you turn it around really quickly. Yes.
Yeah. Are there certain industries that you've seen that have become more attractive nowadays than when you first started? Or certain industries that aren't as attractive as, you know?
Yes. The home servicing companies have become very popular.
Just,
HVACs, yeah, frictions, plumbing companies, remodeling, not so much remodeling, but what's they call that? It's construction, but it's what if something happens in your house, something breaks, they come in, they help you, they fix everything. Yeah. So those have become very popular, and the reason is they're not depending on the economy. Yeah. So if economy is good, if your water breaks, you need to fix it. So you have a fire, you need to fix that. And so they're recession proof. No matter what happens in the economy, they're gonna do okay for the most part.
Yeah.
Now, what's the caveat of those? I like people that come in and have transactional experience.
Yeah.
Skills that relate to that business, and you understand how the licensing works, what it needs to be. You do want somebody that has, for the most part, a license or experience.
Yeah, especially in those types of industries, right? Like the home services there's something, electrician or HVAC, and things like that there. But what if, let me ask the question, what if the buyer doesn't have the license, but say there's a key person? Like, are you still cool with a deal like that? Or how do you like it?
My question, yes. And we have done it in some cases. Here's my worry on that. Let's say you go buy a plumbing company, right? Yeah. And you have great skills, you've worked in corporate, you can manage people, and then you go, hey, I don't have the license, but my key employee has it.
Yeah.
And you go, great. You go by the company and you guys get into a fight in a week, and the guy goes, I'll see you later.
Yeah.
What are you going? What do you know about plumbing? What do you know about So then you go, well, just hire somebody.
Yeah.
Well, you know how long it's not like you just go out there and hire somebody a week. It's gonna take time. And so, but now you have a $4 million loan payment that you're gonna make every month, right? And we're not gonna wait. We could, but we're not potentially gonna do it. So, now if you go and say, hey, I'm buying this electrical company, and my key employee now owns 15% of it.
I see. Yeah.
He's not just gonna walk away, because that could be significant amount of money. And so he's got skin in the game. He's got an incentive to stay at the business. And so chances are,
do you advise buyers to do, or do you at their own discretion?
I would prefer, and I think the bank overall prefers that. Yes. Just in certain states, there's certain regulations in different states and counties that if you own the business, you have to have a license. So that's the thing that I tell people: make sure you do your research. I don't care if your minority owner owns it. If you're the majority owner, you're guaranteed that you have to have the license.
Yes, right.
So we've done that before too. Yeah. So just make sure you do your research to understand what are the license requirements for me to own the business.
And so home services has been on an uptick. How about what industry, as you've seen, has lost its attractiveness?
I wouldn't say that is lost its attractiveness. I would say more they're just riskier. Maybe restaurants.
Yeah. Yeah.
Anything retail, yes, it's hard. And for the right buyer, it's a great opportunity. You just gotta make sure you know what you're getting into. Yeah. The one thing with restaurants, I will say this, when I'm doing my initial interviews with clients, I ask them, how much are you going to be there?
Yeah.
And they go, well, it's a couple of hours, but we got a great manager. I go,
yeah.
No, man, you need to be there like 60 hours a week. If you want that restaurant to be successful, you have to be there. So for the most part, if it's somebody that's just buying it and they're going to keep their employment, I try not to. I frankly do that just because I've seen how much work it takes and how involved you have to be as an owner to make the restaurant successful. That one is hard. Retail is kind of the same, in general. It's just very transitional and I don't know. And, when the economy's not doing so great, like I take people to lunch all the time. We go out, I go with these lions, I go with ropers, there would be times where I go to a restaurant and doing it, there's nobody.
Yeah.
For me, and that it is scary. But and what there's only so much. There's a lot of competition.
Yeah, it was
Restaurant here, restaurant there. Like, I don't know. I like doing them for the right person,
right.
for the right buyer. Yeah. So I think that one just comes to mind. I mean, I'm sure there's others.
Yeah, we're absolutely we don't like doing restaurants.
Yeah. What have you seen? Is that kind of what?
Yeah. Don't like touching restaurants. It's always a challenge. Currently have one at the moment that very established, great location. But the two owners, the majority owner is the chef.
Oh,
Yeah, head chef.
okay.
And the other owner is sort of the business ops person.
Okay.
And the chef wants to win.
So
So that's, it's like,
that's a problem.
yeah, what type of buyer, and it narrows the pool, right, of the type of buyer that you can get. You can really, you either have to get a buyer that is a chef.
Yeah, and sure. Yeah, and then they're gonna keep the menu because what if people just go there because of because of the menu?
And the crazy thing about this one, there's like a scratch kitchen. They do seasonal menus. They change their menus fall, spring, summer, winter. So imagine that. So and that's one of the things, right? Like, and as I know, you want to see the ongoing and continuation, right? The flow, business, exits, new business or new acquisition. But like with those challenges, it's kind of like, really the only option really is if you're tired, close down and just, see what what else there could, somebody else could come in. Yeah, that's it. Yeah. But, restaurants don't like to touch them. I think probably,
Cool, but it's nice to have one and you get to meet people. You're at the bar, you're having a good time, but in reality, man, they're very time consuming. It's a lot of work. It's about managing. You got to manage people. Manage well. Some people don't show up on time. Like you got to raise wages, and now your margins are so thin.
Yeah.
I mean, margins are thin too. Like what I understand, restaurants,
they are.
you got to sell a lot. Not a lot.
Yeah, you got to expand into the catering. That's where with the catering business that we have there. That is a great niche because that factor there, and you don't have to deal with servers in a restaurant. Yeah, it's like very transactional. Sort of you make for that moment there. So opposed from kind of having an idea, months in advance and what your perspective, you can kind of plan out there, the things. But I agree. Home services, it was interesting. There is a company that worked on several years ago. They handle, say you buy a new home and they set up your entire home things, your electrician, that you need air filters, water filters, and things like that. The interesting thing is that I worked on the valuation of them, and they were the company. My mortgage lender referred me to them for my remote.
They would help you find.
They're not like a concierge. It's like your electricity, everything, and at the time they were being approached by there was a company that was rolling up these services because to your point there, one-stop shop, very easy for homeowners, and I see that very attractive, especially in the Texas market where the population growth, the amount of people are here. That's been a very attractive news.
And those are you're right, especially here in Texas. I think those companies have become exceptionally popular in the past 2-3 years. It's just a growth of just Texas overall. It's just expanding so rapidly that there's not enough servicing out there to service people.
Yeah.
And so, and obviously people too saying like, we're just turning away this and it because you don't have enough.
Yeah, true. But as we close out here, what do you see, over the horizon? What are you looking forward to, end of this year, moving into next year, in the SBA lending environment?
Yeah. So no, thank you. So, just overall great. I mean, the volume is great. Again, influencers, people out there, they're promoting business acquisition. So, again, it's become very popular. People are doing it a lot. So definitely looking forward to a lot more transactions, helping people, fulfill their dreams, buying what they've always wanted to do for the right reasons, for the right person. One thing I would say I'm looking forward to or hoping that SBA adjusts their SOP a little bit is the $5 million cap is becoming a little bit
too tight.
a little bit tight.
Yeah.
And just in general, businesses are just growing faster or getting bigger faster. And so now we're finding ways on how, oh my God, it's an $8 million deal. It's a $10 million business, but we can't do it. We can do it with SBA because SBA is only $5 million.
Yeah.
But then they run into other banks don't want to do it either because it's too small.
Oh yeah.
So they just, the middle market, they're really not touching $8-9 million business.
Yeah.
But then we can't do it either because it's SBA. So then you got to find all these ways to get creative of like, oh my God, how do we fit this deal into the 5 million?
Yeah.
And so that's becoming a little bit of a hassle recently because I've seen more like 7 million, 9 million, 10 million.
I've been seeing that.
Right?
Well, yes, yeah.
But it's like, okay, sorry, we can't do SBA, and then you're going to try to middle market is like, what is it? No, we want that. So that's the only thing that I hope that maybe gets changed here pretty soon. But again, other than that, very strong, very strong economy, very strong business acquisition market, and yeah, looking forward to do a lot more deals.